Our fairness has been partly misunderstood. The converse of tax terrorism is not a tax heaven.
Addressing corporate leaders, the finance minister talks tough on tax, says every legitimate tax demand is not tax terrorism, sends out a strong message to foreign investors seeking MAP relief, says India is not a tax haven.
And even as the government talks tough, tax litigation continues to pile up. Kane India moves the Delhi High Court against the 20,000 crore rupee tax demand. Tax Department alleges Kane India did not pay capital gains tax when shares changed hands during an internal group restructuring 7 years back.
The Excise Department imposes over 2 crore rupees as penalties on the former and current staff of Mondelez India in a tax evasion case. Former MD Anand Kripalu, who is now the CEO of United Spirits, told to cough up 1 crore rupees. Mondelez plans to challenge the order.
A late rally lifts sentiment on the Lal Street. Nifty comfortably reconquers 8600. Sensex surges by over 240 points. Pharma and realty stocks lead from the front.
The government will kick off its divestment drive for the new fiscal year this week. The centre will offload 5% stake in the Rural Electrification Corporation or REC this Wednesday. At current market price, the government could mop up 1,600 crore rupees, but sources say a discount is almost certain.
It's a long road to recovery for Motown. Auto sales continue to remain sluggish as unseasonal rains hits rural demand even further. Commercial vehicle sales show some signs of a pickup.
180 listed companies, including 32 public sector companies, are yet to appoint a women director on their boards, despite the market regulator's deadline to do so ending on the 31st of March. A Prime database survey shows Renu Karnad and Ramni Nirula hold the maximum number of 7 board seats each.
Prime Minister Modi launches India's first all-quality index for 10 cities, says India contributes the least to pollution and vows to fight the perception India does not care about global warming.
Every time me and Mahi have played, we've had a great partnership, we've had good friendship.
The man who won 2 World Cups for India, Yuvraj Singh, speaks about MS Dhoni missing out on the 2015 World Cup and his newfound love for venture capitalism.
Well, I hope there's a rate cut. 25 basis points would be appropriate, I think. I also am in favor of lower rate of interest, but I don't think that is likely tomorrow.
Growth in India is not in as strong a footing as some people expect. So that does give Governor Rajan room for the near term.
We still expect another 25 to 50 basis point of rate cuts to happen if our overall inflation trajectory view on that remains correct.
Our base case is for no more cuts. Will he, won't he? On the eve of the credit policy, corporate India is hoping for a rate cut, but market watchers and economists polled by CNBC TV 18 don't see that happening. An overwhelming majority expect a status quo policy. Good evening. Thanks very much for joining us on India Business Hour. Nantara, what do you expect? A rate cut, no rate cut, status quo policy?
Who am I? I'm not an economist or board trader.
I'm just asking, yeah, but
I hope he
you have an opinion on everything.
I hope he cuts rates and the EMIs come down.
All right. She's playing it safe. But we have plenty more to talk about this Monday evening.
We have too much to talk about, Shireen. The markets, credit policy, divestment drive. It's certainly an action-packed show.
All right. So let's get things started with the day's trading action. The bulls have made good work of the long weekend to return to the street recharge. Late surge saw major indices close with some healthy gains. The Nifty managing to retake 8,600 with a comfortable margin, and the Sensex surging over 240 points, shooting past 28,500. Not to be left behind, mid-cap stocks put on a show of strength. The mid-cap index gained about 120 points over the day. Now, the bulls may be well rested, but some experts don't expect these energy levels to sustain for much longer. Mark Matthews of Bank Julius Baer & Co. says that while he does expect the markets to trend higher in the long term, the short term will be plagued with correction and volatility. Panu Baveja of UBS says that India stands out amongst other emerging markets, and that's because of strong fundamentals, but he also believes that maybe we are running ahead of growth reality at this point in time. Listen in.
I'm not looking at a huge price gain between now and even the end of the year, I'd have to say. I mean, longer term, I still think it's a superb market for all the reasons that we've talked about in the past, the high return on equity, the very large and young population, the new government, the infrastructure that's going to be built. It'll all happen, but not probably as fast as people had anticipated.
The reason why we won't see a likely collapse in this market is because, frankly, this market at this minute is being driven by FIIs. It is true that, relatively speaking, India is in a better position. I think people don't want to leave that trade. I think they may take some chips off the table, but I find it very difficult to believe that they will sell India and buy other emerging markets, because by comparison, India is better. It's a weak relative story. In absolute terms, I'm not sure that there's a lot of joy here.
There you go. That's the outlook for the markets coming in from UBS. The government has wasted no time in kicking off the FY16 divestment calendar. Do remember, it is budgeted almost 69,000 crore rupees. Rural Electrification Corp, or REC, will be the first on this year's list. The government will sell 4.93 crore shares in REC. That's a 5% stake sale through the offer for sale, which has been set for the 8th of April. Going by market price, the government can mop up almost 1,600 crore rupees. Meanwhile, the market regulator has released a discussion paper which proposes some sweeping changes in the offer for sale route. Interestingly, these are all suggestions that have been made by the Finance Ministry. SEBI has now sought comments from the general public on whether to reduce the OFS notice from the current 3 days to just 2 days. Another suggestion put forward by the regulator is to impose a price ban on the day that the OFS notice has been put out to the stock exchanges, and in what could give some leeway to the companies, the option of slotting the OFS on a Saturday, and retail investors may continue to be allowed to bid at the cut-off price. Comments invited till the 18th of April.
This is the big pitch that's being made by the Disinvestment Secretary. Let's see whether this does go through or not. Now, a big reason for the stock markets rallying to their highest intraday level in about 2 weeks is because traders have moved to defensive positions a day ahead of the Reserve Bank's credit policy. So what are bankers, economists and bond dealers expecting from Governor Rajan's first policy of the new financial year? Ritu Singh and Manasvi Gilani bring you the results of the CNBC TV 18 credit policy poll.
Governor Rajan has surprised the market twice with out-of-turn rate cuts on January 14th and March 4th. In the intervening scheduled credit policy on February 3rd, he refused a cut on grounds that the rate cut had just 20 days before on 14th January. Consequently, this time around too, 75% of the bankers and economists polled by CNBC TV 18 said they don't expect a rate cut. After all, Governor Rajan gave one just a month ago on March 4th. Also, the only inflation data that came after March 4th surprised on the upside. But does that mean he will cut the CRR? An even more overwhelming 85% said no. Though a small minority is expecting RBI will cut CRR by 25 to 50 basis points, CRR being the percentage of their deposits that banks must keep as cash with RBI. Will RBI cut the SLR, percentage of those deposits that banks must invest in government bonds? A good 40% said yes, though even here a majority of 60% said no cut. This being the first policy of the year, the market is also watching for RBI's growth forecasts. This is a tricky issue for RBI after the CSO, while revising the base year from 2004 to 2011, revised the FY15 growth forecast to 7.5% from much lower levels earlier. A majority, or 60% of our respondents expect RBI to forecast a 7.5 to 7.9% GDP growth this year, that is in FY16. The governor's speak on inflation will be closely watched. Is he lowering his inflation target from FY16 from the current 6%? When we asked respondents if RBI will meet its FY18 target of 4%, the replies were mixed. Only a minority of 40% gave a high probability of 75 to 100% of meeting this target. 60% was very low chances of RBI meeting this target. Accordingly, the number of cuts expected hereafter also varied. A majority of 65% said only one more cut is possible. 30% said 2 more cuts are possible. Only 5% said 3 more cuts are possible. 65% of industry experts expect the next rate cut in June. 15% see another mid-policy cut in May, and another 15% see the next cut in August. Besides rates and forecasts, the governor could make regulatory announcements in the policy such as schemes on monetization of gold or standardizing the ways banks calculate the base rate. Above all, Governor's comments on the rupee will be closely watched out and parsed. In Mumbai, with Ritu Singh, Manas Vigilani.
Well, Governor Rajan has surprised the street twice this calendar year. Will he make it a third time, and the first for this financial year is the big question. But remember to tune in to CNBC TV 18. We'll get you all the credit policy action live right here. Now, the top story tonight. Finance Minister Arun Jaitley has refused to give in to the demands being made by FII seeking exemption from MAT payment. CNBC TV 18 had exclusively reported this on the 10th of March when senior Finance Ministry officials had said that there would be no clarificatory order by the CBDT. The Finance Minister also rubbished claims of tax terrorism and said India cannot be treated as a tax haven. Listen in.
Finance Minister Arun Jaitley today hit out against mounting pressure from industry over allegations of tax adventurism. The bone of contention is over a reported 100-odd tax notices served to FIIs from financial year 2012 to 2015. The tax notices pertain to demand for the payment of MAT on capital gains made by FIIs coming even through the Mauritius route. These FIIs are exempt from capital gains, but the Authority for Advance Rulings, or the AAR, in 2012 refused to offer an exemption from the payment of MAT, and the assessee in question lost the case. The matter is now sub judice with the Supreme Court, but the Revenue Department in the meanwhile has taken the support of the AAR judgment to slap notices for the last 3 financial years. FIIs will get 30 days to reply to the income tax notices and can appeal to the taxman for an exemption. So far, the Income Tax Act was ambivalent on the applicability of MAT on FII capital gains. The Act did not codify the applicability of MAT. Jaitley in his FY16 budget has now offered full exemption to FIIs from MAT.
That India is not so vulnerable that every legitimate tax demand can be considered as tax terrorism. Because we are not a tax haven and we don't intend to be one.
Jaitley didn't stop there. He also took a swipe at FIIs for airing their grievances to the media.
The process as tax terrorism and relief probably may lie in the judicial process, or relief may lie with the legislature for the future. But certainly newspaper reporters can't provide that relief.
Jaitley's message was echoed by the Revenue Secretary Shaktikanta Das.
I think what the FIIs and FPIs are asking is retrospective exemption, not retrospective application of a tax law. Now, because MAT was leviable on them, that is why these assessments, these demands have been raised. Some FPIs, some FIIs had gone to the Authority for Advance Ruling. The Authority for Advance Ruling gave a decision saying that MAT is applicable, MAT is leviable. Naturally, the income tax officers, the assessing officers have raised their demand.
The Central Board of Direct Taxes, or the CBDT, has also told CNBC TV 18 that notices have already been served by March 31st as the cases were time-barred. The government is also ruling out any clarificatory order on this matter. Run-ins with the government over tax claims are far from over. In fact, the government is also in the process of tightening the model bilateral investment treaty that it shares with 90 other nations by specifically mentioning that tax matters will not be covered under such agreements. Just like Vodafone, Kane UK has recently served India with an international arbitration notice under the UK-India bilateral investment treaty, which India is preparing to fight. And while the Finance Minister has termed these as legacy issues, they do raise questions on the non-adversarial approach being promoted by the government. In New Delhi with Sapna Das and Ashwit Kumar, this is Shireen Bhan.
And even as the government talks tough, tax litigations due to the retrospective amendment of the Section 9 of the Income Tax Act continue to pile up. Kane India has decided to move the Delhi High Court against the 20,000 crore rupee tax notice. In another development, the Chandigarh Central Excise Commissioner has levied personal penalties of 1.5 crore rupees on 3 former board members of Mondelez India. Ashwit Kumar and Farah Bukwala, who've been tracking these stories, join us now with the details. Ashwit, coming to you first. Kane India has filed a writ petition in the Delhi High Court against that 20,494 crore rupee tax demand from the government. This after the parent sent an arbitration notice to the government of India. What else are you picking up?
Well, parallel proceedings being initiated here as far as the Delhi High Court is concerned. Kane India is slapping a suit on the government, seeking the quashing of that tax notice that had been sent for nearly 20,500 crores. In the interim, the relief that they've sought is that for the pendency of the petition for that duration, the department should not proceed with taking any coercive action against the company. But there are essentially 4 arguments that the petition currently stands on. The first is the issue of time bar. Now, essentially, Kane India, by way of its petition, points out that this issue pertains to the financial year 2006-2007, and that proceedings were initiated 6 years hence. So the argument essentially that of Kane India is that there should be a reasonable time within which proceedings should be initiated. This is definitely not one of them. Argument one. The second point that they've raised is that given that this is a retrospective application of tax laws, Kane India goes on to argue that there is no question of withholding the concerned amount of tax, given that they were not familiar, that they could not possibly anticipate the retrospective application of taxes. On similar grounds, they also raised the third point that there is no question of interest being paid, given that this is again a retrospective application of Section 9. And finally, they go on to argue that tax liability, should it arise, even in the case of the argument, assuming that it arises, it should rest with the UK-based parent and not with the Indian-based company. And that's essentially the four arguments on which the petition currently rests. We understand the petition will be taken up by the Delhi High Court in this coming week. So we're watching out for cues from the Delhi High Court regarding this big-ticket tax battle. Back to you.
And this is the second time Kane India has approached the Delhi High Court when it comes to the tax case. When the Modi government had been elected, it had withdrawn its petition to try and settle the matter amicably. Thanks, Rashmi, for joining us with that. Farah, now coming to you. Tell us about the Mondelez case. Who all have been penalized and why?
Well, the Chandigarh Central Excise Commissionerate has levied personal penalties of 1.5 crore rupees on 3 former board members of Mondelez India. A penalty of 1 crore rupees has been imposed on ex-managing director Anand Kripalu, who is the current CEO and MD of Diageo Control United Spirits. A penalty of 25 lakh rupees has been imposed on former executive director Rajesh Garg, who is now the group CFO of pharma giant Cipla. A penalty of 25 lakh rupees has also been imposed on ex-director Jerboy Phillips, who is currently the director of operations at GlaxoSmithKline Consumer Healthcare. Now, personal penalties totaling to 65 lakh rupees have also been levied on 5 current and former managers of the company. Now, these penalties are part of an order issued by the Chandigarh Central Excise Office last week, a copy of which is in my hand, and which ordered Mondelez to pay 583 crore rupees towards unpaid taxes and penalties. In a statement to CNBC TV 18, a Mondelez India spokesperson said, and I quote, "The company is examining the commissioner's order and will challenge the same in appeal, as we firmly believe that we have correctly claimed exemption of excise duty. We also firmly believe that our executives acted in good faith and within the law in the decision to claim excise benefit in respect of our plant in Baddi," end quote. Now, Mondelez will make this appeal at the Custom Excise and Service Tax Appellate Tribunal in New Delhi. We tried to reach out to Anand Kripalu and the other executives. While Anand Kripalu declined to make an official comment, Rajesh Garg did not respond to our email, and Jerboy Phillips could not be reached for his comments. With that, it's back to you.
All right, Farah and Ashwin, appreciate you joining us there with the latest on both those stories. We're talking tax, and more tax. Let's have our conversation with Dinesh Kanabar, the founder of Dhruva Tax Advisors. Dinesh, appreciate you joining us here on India Business Hour. Before I get into the merits of what's happened as far as the MAT issue is concerned, let's look at the statements coming in from this government and specifically from the finance minister. This was a government that had promised to go away from tax terrorism, go away from an era of retrospective taxation. This was a government that the finance minister across several public forums had stated that the adventurism of the taxman needed to be reined in. And today, in the middle of a CII conference, the finance minister is saying very clearly that our fairness has been partly misunderstood. India is not a tax haven. Every legitimate tax demand cannot be made a case of tax terrorism. What do you make of all of this, Dinesh?
So first, I think I would agree with the finance minister that there is a tax haven, which India is definitely not, and then there is tax terrorism. And I think beyond all these cliches, we really need to figure out what is it that constitutes a fair tax regime, a non-adversarial tax regime, and I think that is what is more important. These cliches are not going to take us anywhere. So, for example, I've been hearing you talking about this story on Kane Energy, and again, I'm not here arguing about merits of any matter. But the fact of the matter is that in the respect of Kane Energy, where the Indian company is being proceeded against for a recovery of withholding tax, how could somebody have done something which is impossible to comply? Meaning thereby that if at a point of time when somebody was required allegedly to withhold taxes and the Supreme Court says that the law did not require such withholding, how can you retrospectively impose a liability to withhold taxes? Forgetting a tax liability per se, but how can you retrospectively determine a withholding thing? And I think that is where we need to come back and say that will everything be resolved at the Supreme Court, or will the government proactively come back and say, take a stand? So coming to this other issue, which is regarding FII taxation.
Yeah, I'll come to that in just a second, Mr. Kanabar, but if I could just take the point that you've made forward. This business of whether or not we've actually seen this government move towards providing a more non-adversarial tax regime, because you mentioned Kane, and I'm not getting into the merits of Kane, but when questions were asked of the finance minister about dealing with the Kane matter, he said, well, this is a legacy issue, and we've got to address it because it's a legacy matter and the law will take its own course. Are we seeing definitive action on the part of this government to try and address or try and create a non-adversarial tax regime?
So at a policy level, absolutely yes. I think there is every attempt being made by this government to create a non-adversarial tax regime. The first example, of course, is the non-filing of the appeal to the Supreme Court in the case of Vodafone on the transfer pricing matter. Or, for example, this entire approach that the finance minister took, which I think was very welcome, to say that I'm going to do away with tax exemptions and deductions and bring down the rate of tax, because it is the exemptions and deductions which creates a huge amount of controversy. Or, for example, the entire abolition of wealth tax or the pushing back of general anti-avoidance regulations. What I'm not able to understand is, first of all, we have a situation where every litigation ends up with 15-20 years into Supreme Court. Is that a tax regime which this government wants to encourage? Can we not really come back to a situation where one can come up with a reasonable tax policy in advance, where the government puts its stated intention and implements it? And that is where I find there to be gaps between what the government is professing and the government is actually implementing.
Okay, Mr. Kanabar, now if you could specifically address the issue that is the big bone of contention this evening, which led to the finance minister's statements this morning, and that is the issue of MAT being levied on FIIs and FPIs. You heard the Revenue Secretary on that story saying very categorically that the taxman is sending out these demand notices because of the AR ruling in 2012, which basically upheld the taxman's point of view.
So we have two rulings from the authority for advance ruling, one which is a favorable one to the SSEs, other which is a negative one, and the one which is pending before the Supreme Court and is being examined by Supreme Court. It's been there out at least for the last 2.5 years, and one is awaiting Supreme Court taking up this matter. You may be aware, for example, very recently that Supreme Court has actually set up a bench which now is hearing tax matters on a day-to-day basis. And one is hoping that this matter which is pending before Supreme Court is decided sooner rather than later. But one question which comes up, so one is on the merit part. On the merit part, the question is that whether a foreign institutional investor who does not have any base in India, who is not required to maintain books of accounts in India, can there be a liability to book profit tax at all? Now that's an issue on merits which will be decided by the Supreme Court. But look at this issue. You have a situation today where, for example, you have ECBs and there is a concessional rate of tax provided of 5% withholding on ECBs. Are you going to charge book profit tax of 20%? Then why do you have a regime of 5%? Or let me give another example. In this finance bill, the finance minister came back to say that we are reducing the withholding tax on royalties and fees for technical services from 25% to 10%. Now, are you going to subject these recipients to a book profit tax? Because then you will say now pay tax, MAT tax, and therefore any rate of tax below 20%, which is effectively what the book profit tax comes up, is illusory. So somewhere in the line, I find that there is a gap in this entire thought process, and the government needs to go back and relook at it.
So my final question, and in 10 seconds I'd like an answer, Mr. Kanabar. Do you feel investors today, both foreign or domestic, do you feel that tax-related concerns continue to occupy mind space and boardroom space? Because that is what we saw happen in the final years of the UPA. Do you believe that there is any comfort level being seen on that front, or do you believe that tax-related concerns continue to weigh in on investor sentiment?
Unfortunately, I would like to believe that the tax-related matters continue to weigh very, very heavily. If all the FIIs are going to sit back and look at what were the earnings which they had over the last few years and are today called upon to pay a book profit tax, it's going to be an absolute disaster, if I may say so. And I think that while the government, as I mentioned earlier, has taken significant steps at a policy level, I think at an implementation level, a lot more needs to be done before we can actually say that India has a non-adversarial tax regime.
All right, Mr. Kanabar, we will have to leave it there. As always, appreciate you joining us here on India Business Hour with your thoughts and your opinion.
Thank you.
Yuvraj Singh is donning a new hat. He has been bitten by the e-commerce bug and is launching a startup fund, UWeCan Ventures. Yuvraj, the 2011 World Cup's man of the tournament, did not make it to the World Cup squad this year, but he did emerge as the most expensive player at 16 crore rupees in the IPL 8 auctions, which happened during the World Cup. UV refused to comment on the alleged strained relations with Dhoni and said, "We played lots of cricket together, can't comment on what's being reported in the media, we're good friends." Here's an excerpt of that conversation. Will you be leveraging Yuvraj Singh, the brand name, as well when you have this startup fund? Like if you invest in a startup, would you automatically become the brand ambassador?
Yeah, definitely. I wouldn't say, I'll be the brand ambassador. I would definitely love to give my name, but I think giving your name will also give an opportunity for a business proposition to start. So I think the name would be the most important thing.
And have you already started figuring out which companies you like more or which companies you want to invest in?
Well, we have thought about a few companies. I mean, as I said, friends and associates have been there to support me. So we're in plans, we're discussing a lot of things, and hopefully things will move forward very quickly.
Can you tell me which sectors in e-commerce you like more? Is it hospitality? Is it food? Is it retail?
I think all the sectors are important. Hospitality, food. I think for me, healthcare is the most important thing. People have started to take their health very seriously. Since my experience, there's one area I would really like to concentrate on. So yeah, a lot of opportunities over there.
Okay. I'm just going to ask you this question because so much has been written in the last few months. What's your relationship with Dhoni really like? Is it a good relationship?
Yeah, definitely, we played for so many years together, and a lot of things are said in the media about team selections. As a captain, you gotta first see what is your best playing 11, and you have to form a team according to that. So I don't think all the blame should go on Dhoni for whatever's happened. 11 guys are playing on the field and they should take the responsibility.
Now, I was talking about you and Dhoni. Is it still a good relationship? Because so much has been written about. He's also been blamed for you not being part of the team.
See, I can't really comment on it because I have not been in the selection process. I don't know what's going on in the selection. I think every time me and Mahi have played, we've had a great partnership. We've had good friendship, and so I can't really say what's happening in the media. I can't really talk about it. I'm very comfortable playing with him.
Well, that's Yuvraj Singh talking about his startup fund. For more on that, do tune into Young Tech this weekend. But it's time for us to wrap up this edition of India Business Hour. Tomorrow is a big day. Will Governor Rajan surprise us, or will he deliver a status quo policy? Remember to tune in to CNBC TV 18 for the credit policy and the market action. From all of us here, good night. Thanks for watching.